The major US stock indices recovered from Monday losses led by the mega cap technology stocks, thanks to a positive news flow up from Amazon in conjunction with Nvidia. The US dollar continues to decline for the third consecutive session, and the US dollar index now is testing a key near-term support level, and the ongoing US dollar weakness for today is being led by the Aussie dollar. Very good morning to all. I'm Kelvin here. Welcome back to your daily dose of market insights by OANDA. And my apologies for the late start today due to a technical problem over at my laptop. So before we kickstart today's gist of the daily dose that will comprises all the intraday technical outlook chart of the broad-based cross asset classes that we cover on a frequent basis, let's have a quick look at the disclaimer slides first. Leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exit deposits. This presentation is for general information purposes and is not investment advice. Past information is not representative of future results. Right, so let's kickstart with what has taken shape in terms of the news flow, economic data release, and their impact on the broad-based cross-asset classes. So like I mentioned, yesterday we see a turnaround in the major US stock indices led by the Nasdaq 100, which is up by 0.8%, the SPX up by 0.25%, the Dow Jones up by 0.4%, and the Russell 2000 down by a modest decline of negative 0.17%. And still bear in mind, for those who followed my daily dose on a frequent basis, despite that post-Thanksgiving Day sell-off that was triggered on Monday without any relevant fundamental drivers, but it's more in line with the weakness of the crypto market at that point in time, at the start of the lower liquidity Asia session on Monday. All the major US stock indices managed to held above their respective key support that we covered, which is the US Wall Street 30, the Nasdaq 100, and the SPX 500. Later we touch on that in a while time when I cover the second segment of the daily dose. But what's interesting over here is that the turnaround yesterday was right exactly close to our short-term pivotal support that we highlighted earlier. So the reason why the Nasdaq 100 managed to outperform yesterday was actually thanks to a slew of strong gains in the mega cap technology stocks, where Apple managed to rally by positive 1.09%, Nvidia 0.86%, Amazon 0.23%, and Microsoft up by 0.67%, thanks to a particular news flow over here where Amazon mentioned that the company decided to use Nvidia tech in Amazon own AI chips and planning to roll out more new servers. So that actually created a positive feedback loop into the Nasdaq 100 yesterday. And also on top of this news flow, one particular news point highlight is more on the FX market over here. So the FX market, like I do mention that the dollar continues to remain weak from a technical perspective. So what we could see is that ever since the US dollar index has created that series of bearish candlesticks on 20th of November all the way up to 24th of November, right exactly at a key medium-term range resistance upper limit, which is the 100.54. And bear in mind, the US dollar index continues to trade within this complex sideways range configuration since the low of July. And yesterday, it continues to shape a bearish candlestick for the third consecutive session after failure to breach above the key 200-day moving average, which is in orange, and the shorter term 20-day moving average, which is in light pink over here. And right now it's actually inching to break below a key support level at 99.25. Right now it's trading at 99.22, and also trading to break below this last line of defense, which is also the 50-day moving average. So still bear in mind that from a technical perspective, the US dollar index has now faces a risk of a further downside towards the middle part of this complex multi-month sideways range configuration, with the next support level coming in at 98.67, followed by 98.03 as we head into the major key risk event for the remaining part of this month, will be the 10th of December FOMC meeting, where market participants now has starts to price in a continuation high chance of more than 80% chance that the Fed will ignite its third interest rate cut for this year on the 10th of December FOMC meeting with a high chance of 88%. All right, 88 0.1%. So that is rather on the very high side. So unless if the Fed fails to deliver and does not cut, then we will potentially see a major bullish move up on the US dollar index. All right, and also in today's Asia session, the leading currency that is causing this US dollar weakness is the Aussie dollar. So based on the 5-day rolling performance as of the US dollar versus other major currency, as of now we are speaking, the dollar Aussie. So this line here are all plotted against the dollar as a base currency. So if this line are all turning down, that means the dollar is weakening against the other major currency pair. So the dollar has weakened against the Aussie dollar by negative 0.89% based on the 5-day rolling performance. And if you skewed on a 1-day rolling performance, the dollar is down by negative 0.23% against the Aussie. So what causes the Aussie to be so strong is due to one hawkish remark by RBA governor in her speech to the Australia Parliament. So he warns the Australia Parliament that the RBA, which is board, would act on renewed price pressure. So that causes the Aussie dollar to jump against the USD. Still bear in mind, yesterday the Aussie dollar was one of our chart of the day due to that very interesting positive technical configuration. So this particular hawkish remark by RBA Governor Bullock reinforced our chart of the day bullish bias view. And also in today's Asia session, before the start of our daily dose at 11:15 a.m. today, due to the slight glitch on my laptop, I apologize for that. The Australia Q3 GDP data, where was it? Yeah, this one. So the Q3 GDP data came in slightly below expectation. So for the year-on-year growth rate over here, it was estimated or expected to be at 2.2% annualized, but it came in at 2.1%. But if you go on a quarter-on-quarter basis, the difference was much more starker. So the market expectation was 0.7% Q-on-Q growth for Q3, but it came in 3 basis points lower at 0.4% Q3. So it represents that the Australia growth is not that red hot. All right, over here. So given that the Australia economic growth is not that red hot, that means, i.e., potentially, it means that inflationary, not that so-called red hot, I would say. So potentially, it means that on top of this RBA, we call it governor warning on renewed inflation pressure to her speech in Parliament. That means there could be a much more balanced approach in RBA monetary policy stance going forward over here. All right, so yes, growth is not that red hot, but RBA is warning about renewed inflationary pressure. So going forward over here is that the current interest rate pause by RBA may continue in the next couple of months, at least heading into Q1 of 2026, as the RBA board going to assess conflicting data that is coming out from the Australia economy over here. All right, so that covers the first segment of the daily dose for today. So let us now immediately jump on the second segment, which is the intraday technical outlook chart, all right, of all the broad-based cross asset classes. But without further ado, let me expand my screen first. All right, so let us start with the FX market. All right, so the FX market, let us start with the euro dollar. Right, so the euro dollar continues to bounce up as expected, and now enrolling towards our first resistance, the second resistance level at 116.50, 116.60, 1.1650, 1.1660 over here. All right, so what I'm going to do over here is that this will be my first support level to watch out for today, right, which is the 116.50 level. All right, so I think my screen didn't get expanded. Yeah, good. So this is the screen should be expanded now. Right, so first support level to watch in any particular dips will be at 116.50, which show confluence with the former minor swing high of Tuesday US session, which yesterday broken out during the last closing hour of the US session and continues to rally in today's Asia session. So this will be a near-term pullback support, and this near-term pullback support also confluence with the 50-day moving average. So this will be my first support in any potential pullback. So my pivotal support level for today, I will tighten it up higher to yesterday's Asia yesterday's US session low at 115.90. All right, over here. So let me adjust the pivotal support level to 115.90. All right, over here. And this will be my next support level to watch. Oops. Okay, let me put it down. Okay, let me remove this. Okay, good. All right. So as long as any of the as long as any potential minor pullback didn't surpass our Titan short-term pivotal support level on the euro dollar for today at 115.90, also confluence very closely with the rising 20-day moving average as well. We will still continue to maintain our bullish bias that we have on Monday to seek out a higher high on the euro dollar on the intraday basis. Above 116.60 may expose the next intermediate resistance level, 117.20, which is the minor swing high area of 6th of October and 17th October, and so confluence with a key Fibo extension level in this ongoing recovery phase, taken down from the low of 6th of November, project it to the low of 21st of November, coming in at 1.236 Fibo extension level, which confluence with the 117.20 level. So potentially this could be an ongoing minor bottoming formation that the euro dollar is forming. So unless today we see a bearish breakdown and an hourly close below 115.90, then that would soften our bullish bias stance to see a retest of the next near-term support level at 115.50/115.40. A breakdown below it may see a deeper slide to retest the double bottom minor low swing low support level at 114.95 over here. All right, so that's for the euro dollar. Next up will be the sterling dollar over here. So the sterling dollar can't break above our first resistance level, which is at 132.50 yet. So still much more weaker state than the euro dollar. So we will not want to tighten that much on the pivotal support level for now, because given the fact that it may just do some kind of whipsaw formation between this 132.50 and 131.40, which is confluence with the 20-day moving average as well. So that bearing in mind, any potential minor pullback, as long as this pullback didn't surpass below 131.40, I'll still maintain my bullish bias on the sterling dollar, a bit that the sterling dollar is moving at a lower momentum as compared to the euro dollar. So above 132.50 level, potentially take us up higher towards the next resistance level at 133 figure level. Then thereafter, do keep a lookout to 133.70, which confluence with a key Fibo extension level of this potential double bottom formation that is forming or that has already been in play. At 1.618, that confluence with the minor swing high area of 23rd of October and 28th of October as well at 133.70. Only a bearish breakdown below 131.40 will invalidate today's bullish bias stance on the sterling dollar to see it floating downwards towards 130.85, maximum the double bottom minor swing low area at 130.40. So that's for the sterling pound or the sterling dollar. Up next will be our yesterday's chart of the day. The Aussie dollar continues to be in a bullish limelight, hitting our resistance level at 65.80. So that being said, I will actually now tighten my pivotal support level to close to the 50-day moving average, and as well as Tuesday and Monday swing low area confluencing at 65.37. So this will be my new pivotal support level, 65.37. And this one here will be the next support level to watch, 65.20. Right, so this one here, I did it. All right, so now the intermediate support level, in any case of any minor pullback that may take shape during the start of the European session, all right, will be potentially at 65.60 level, 65.60 level, this area here. So as long as any form of pullback didn't surpass below our Titan short-term pivotal support at 65.37, I'll still maintain that ongoing bullish outlook on the Aussie dollar. Above 65.80 potentially exposes the next two intermediate resistance level at 65.95/66 figure level, followed by 66.20/66.30 level, which is the very clear minor swing high area of 24th of September to 7th of October that the bulls got rejected previously. All right, only a bearish breakdown below 65.37 that would invalidate today's direct bullish bias push up to see a deeper minor corrective pullback towards 65.20, maximum 65 figure level, which confluence with the 20-day moving average as well. So that's for the Aussie dollar, still maintaining our bullish bias, but with a slightly adjusted upwards short-term pivotal support at 65.37. All right, so that sum up all the four major US dollar pair. Let us proceed to the major stock indices, starting with the Hong Kong 33, right, represented Hang Seng Index. So the Hong Kong 33 now testing our short-term pivotal support at 25,840, and also with the RSI now bouncing off or exiting off from the oversold region as well. So still no change, still keep that bullish bias scenario, but I would have a slightly lower resistance level for today. That will be at this level here. One second, let me open up to make sure that is clearer. Okay, so this will be the resistance level. Okay, so this was also today's Asia session opening high as well at 26,010. All right, to round it down, 26,010. Okay, a clearance above 26,010 potentially see a further potential push up to revisit 26,310 next, which is very close to yesterday's Asia session high at 26,275 over here. All right, so let me just slash it, 275/310. Right, only a bearish breakdown below 25,840 that would invalidate the bullish bias on the Hong Kong 33 for today to see a further slide down towards the next support level at 25,410, maximum 25,150, which is the critical minor swing low of 21st of November. So that's for the Hong Kong 33. Next up will be the Japan 225. So the Japan 225 managed to stage a recovery, a bounce over here. So what we could see over here is that from a technical perspective, this seems to be a double bottom formation that is forming. All right, after the test at the medium-term pivotal support level on Tuesday itself. Right now, yesterday's Asia session, right, and it's also bouncing off, and this double bottom, the second bottom, I would say the right bottom managed to form exactly at the rising 50-day moving average, and also the RSI managed to break above a parallel trend line ascending, a former descending trend line resistance. So given credence to a build up in this momentum, as this minor double bottom that's being formed right exactly at this rising 50-day moving average. So being said that over here of this positive technical configuration, we will flip from a neutrality stance to a bullish bias stance right now due to the emerging of positive technical elements that I explained to you guys earlier. So using a pivotal support level of 49,085 as my short-term pivotal support, which is also the low of this second double bottom, the Monday swing low, 49,085, flip to a bullish bias, a clearance above 50,730. That means the upper range of this intermediate resistance level, 50,730, will see a much more pronounced recovery or the start of an impulsive up move sequence in first step to seek out the next intermediate resistance level at 51,530, which is the minor swing high of 5th of November and 11th of November. And if we do the Fibo extension of this double bottom formation, okay, low of 21st of November, project it up to yesterday's Monday US Monday before the start of the US session low at 8 p.m. Singapore time. That gives rise close to the one-time Fibo extension as well, close to 51,530. Only a bearish breakdown below 49,085 will invalidate this bullish bias recovery view to see it floating downwards and retest the medium-term pivotal support level at 48,450. So that's for the Japan 225. Next up will be the Germany 30, representing German DAX. So the German 30 has a nasty push down on Monday, but this nasty push down managed to survive exactly at the 200-day moving average again and managed to stage a recovery, and now it's trading above the 20-day moving average. So it was a nasty push down that hit our Titan short-term pivotal support level. So given the fact that it still managed to hold above this critical 200-day moving average, tested twice since the first test on 26th of November. So the buyers, and also if you were to do a parallel ascending channel taken from the recovery low of 21st of November, project it to the low of Monday before the start of the US session, it seems to form a parallel ascending channel as well. All right, so given said that, the first support level to watch will be at the 20-day moving average for sure, where it managed to trade that above this level since yesterday's US session at 23,670, but due to the last few days of wild whipsaw movement, I don't want to have a rather tight short-term pivotal support exactly at 23,670. So this will be my first support level to watch. So the pivotal support level, I will adjust it lower to the minor swing low area of Monday, where it got recovered after previously it also recovered on the 26th of November as well, all confluencing at this 23,480 level, and also very closely to the 200-day moving average. So using 23,480 as my short-term pivotal support for today, still maintaining that bullish bias on the Germany 30. Next to resistance zone to watch out for will be the minor swing high of last Friday, and as well as this former congestion area over here, 11th of November and 30th of November at 23,885/23,960. So only a bullish breakout above 23,960 potentially will see the next intermediate resistance coming in at 21,140, now confluencing with the upper limit of this ongoing minor ascending channel drawn from the key minor swing low of 21st of November. Only a bearish breakdown below 23,480 that will invalidate the bullish bias to see it floating downwards towards 23,760, maximum 23,150, which is the minor swing low of 24th of November and 25th of November. And if you do a Fibo retracement from the low of 21st of November all the way up to last Friday high, that also confluence with the 76.4 Fibo retracement level. All right, so that's for the Germany 30. Onward next will be the US Wall Street 30 over here. So the US Wall Street 30 managed to also stage a bounce of our first support level, and so the bounce also takes shape exactly at the lower limit of this minor ascending channel drawn from the low of 24th of November, which is Monday's European session low, and so trading right above the 20-day moving average that is still acting as our short-term pivotal support at 47,035. So unless that price action managed to have a clearance above 47,740 today, then I will tighten my short-term pivotal support level to 47,370. So for now, still using 47,035 as my short-term pivotal support, maintaining our bullish bias. A clearance above our first resistance level at 47,750 will potentially take us up higher. So what's the next resistance level to watch? If I do a Fibo extension over here, all right, so the next level is coming in at the 0.382 at 48,000 psychological level as well. All right, close to the 48,000 psychological level. Which is also the 0.382 Fibo extension. And so some form of minor congestion area over here that was formed during the wee hours of 12th of November. All right. So this will be 48,000. So only then thereafter, after 48,000 will be the retest at the current all-time high that was printed on 12th November at 48,450. Only a bearish breakdown below this 47,035 will potentially see the start of a new minor corrective decline sequence again to retrace a much more deeper portion of this previous recovery from 21st of November to 28th of November, with the two key support level to watch will be at 46,810, followed by 46,575 over here. So if we do the Fibo retracement, let me delete off here the extension. So if we do the Fibo retracement, Okay, that coincide very closely to the 50% and the 61.8% Fibo retracement. All right, so that's for the US Wall Street 30. Next up will be the SPX 500. So the SPX 500 also continues to bounce as expected over here. So it hasn't cleared above this resistance level at 6,848 over here. So given that it hasn't cleared above 6,848, I do not want to tighten my pivotal support to be level to be so tight at 6,807. So bear in mind that where it bounces off previously on yesterday, it bounced off exactly at the pullback support level of that former descending trend line resistance that I drew from the current all-time high of 30th of October. So unless you have the clearance above 6,850, then I will tighten it to 6,807. So for now, still maintaining the pivotal support level at 6,780, 6,760 level, which confluence with the 20-day moving average as well. Still maintaining that ongoing recovery bullish bias on the SPX 500. Next resistance level to watch 6,080, followed by the current all-time high at 6,930, which was made during the 30th of October. Only a bearish breakdown below 6,760 will invalidate the bullish bias direct move to see a deeper corrective decline to retest 6,710, maximum 6,660. So that's for the SPX 500. Next up will be the Nasdaq 100 over here. So the Nasdaq 100 managed to have clearance above our first resistance level at 25,455. All right, pardon me. So this will be my first support level to watch any pullback. So maximum support will be that the pivotal support zone over here, which confluence with the 20-day and the 50-day moving average coming close to it at 25,305. 25,185. So unless we have a clear bullish breakout above 25,760 thereafter, then I will tighten my short-term pivotal support to 25,455 next. So for now, still maintaining the same pivotal support zone at 25,305. 25,185 as my short-term key pivotal support zone to maintain that bullish bias. Above 25,760 potentially take us up higher towards 26,070, which is a 1.382 Fibo extension of this ongoing recovery from the low of 21st of November, and so confluence with the minor swing high area of 3rd of November as well. Only a bearish breakdown below 25,185 over here will potentially see a deeper pullback to have a deeper retracement of this ongoing recovery towards the next near-term support level at 24,920, followed by 24,540. All right, so that sum up all the intraday technical outlook on the major stock indices. So my apologies earlier, earlier on I forgot to cover the dollar yen, so let me move back to the dollar yen again. So dollar yen, what it did over here is that it managed to shape a bearish reaction of our tightened pivotal support level that we have previously at 155.95. So a bit of whipsaw that was being done yesterday. All right, so it printed a high, intraday high of 156.18. So let's tolerate a bit of excess. So given that where it rejected off exactly at the pullback resistance line of this former ascending trend line in dotted gray that I drawn from the low of 29th of October. All right, over here. So it formed another lower high. Right, another lower high, and the lower high got rejected exactly at the former key minor ascending trend line support, now turns into a key pullback resistance level. All right, so tolerate a bit of excess at 156.18. All right, over here, 156.18. Okay, oops, sorry, 156.18. Okay, so let me say this level has been met. So let me do it over here. Okay, this minor swing low coincide with the low on Monday where the rebound takes shape, right? 154.85. 154.85. Okay, so still maintain that bearish bias on the dollar yen. So this will be the dollar yen on the hourly time frame chart of the dollar yen. Tolerate tolerate the excess, which is yesterday's intraday high at the rejection of this critical pullback resistance level, 155.95/156.1818. Still maintain that bearish bias. First support level to watch is the Monday minor swing low that managed to survive exactly at the same level at the previous minor swing low of 18th of November at 154.85. A breakdown below 154.85 potentially will see the next near-term support to come in at 154.40 before 153.80/153.60 next. Only a push up above 156.18 will invalidate today's bearish bias view to see a further squeeze up towards 156.60, maximum 157.15 next. All right, so that's for the dollar yen. All right, so my apologies that I mix up the dollar yen. I miss out the dollar yen here earlier. So let's now go to the price action of gold XAU/USD. So gold also managed to stage a bounce after whipsaw around the 4,190 short-term pivotal support level. All right, over here. So given that this level seems to be get whipsaw, so for today, right, I will have a slightly lower pivotal support level because the reason that I could not be bearish. Why? Because it managed to reintegrate back above 4,190, and how it reintegrate back above, it managed to form a bullish divergence. All right, yesterday. Right, so there's a bullish divergence here, whereas price action shaped a lower low during the whipsaw. Okay, indicating that lack of bearish momentum to push the prices lower. So with that, I will use this congestion area here, right? A very clear congestion area where price action almost hit this 4,150 before turning up. Okay, so for the sake of preventing another whipsaw again, given yesterday's price action, and also today's, there's also a key risk event that is coming up as well. Later, I will share with you guys what is the key risk event. Okay, so this will be my first support level to watch instead of pivotal support for today at at this 4,190. Okay. So still maintain that bullish bias, but with a slightly lower pivotal support for today. Also taking into account of today's, there's a risk event as well. 4,150 short-term pivotal support level. First support level 4,190. All right, so the next resistance still remains the same as Monday high. For the intermediate resistance still remains the same at Monday high in our ongoing bullish bias short-term scenario for gold XAU/USD 4,267. A breakout above 4,267 potentially take us up higher towards 4,340, which is the minor congestion area of 21st of October, and also the one close to the one-time Fibo extension level as well from this ongoing recovery of 28th of October. Right, only a bearish breakdown below 4,150 will invalidate today's bullish bias view to see a deeper corrective pullback towards 4,105. A breakdown below 4,105 potentially see further weakness to test the 50-day moving average again, that where the bears managed to store during the 20th of November to 21st of November period, and so confluence right now with the 50-day moving average. So that's for gold XAU/USD. Lastly will be the West Texas oil. So the West Texas oil failed to actually bounce up further and hit our resistance level at 60.10. All right, and thereafter it traded back down towards the 20-day moving average, and so back down towards our short-term pivotal support that we have on Monday at 59.06. So it seems to us that it may now start to get choppy again down towards the lower limit of this minor sideways range configuration that has been in place since the low of 20th of October. All right, so the thing that yes is something like a descending triangle. So it's like a descending triangle range configuration where we see at the upper limit start to see a series of lower high. All right, something like a descending triangle range configuration. So what I do is that I will use the latest lower high, which is 60.10/60.40 as my short-term pivotal resistance level. That also confluence with the 50-day moving average as well. Flip to a intraday bearish bias. First support level to watch will be 58.35 that managed to bounce yesterday. A breakdown below 58.35 will potentially take us up to the minus swing low, take us down further, potentially to the minus swing low of 21st of November and 25th of November. acting as the next near-term support area at 57.54/57.31. Only a bullish breakout above 60.40 will see will invalidate the bearish case to see a squeeze up back up towards 61.30, 61.70 next over here. All right, which is the minor swing high area of 3rd of November and 12th of November, and as well as confluencing with this minor descending, this medium-term descending trend line that I drew from the high of 31st of July 2025. All right, so that's for the West Texas crude oil. Flip to a bearish bias below 60.10/60.40. All right, so before we go, let's have a quick look at the economic calendar. What are the key risk events that to look out for today, which I mentioned earlier, there will be a key risk event. So today will be the Wednesday. So coming close to Wednesday, the key risk event to look out for will be, if we were to go to the US session very quickly, it will be the ISM services PMI data, which is very, very important. Why? Because given the fact that PMI data tends to be forward looking as compared to GDP numbers, because it's survey based. So why is it important? Because services constitute to close to 3/4 of US GDP growth. Right. So whatever data that is coming out from a forward leading indicator pertaining to the services industry in US will definitely has a significant impact on the FX market, which is the dollar, eventually will be gold, and as well as the major stock indices. So the services PMI data in the last few months continues to grow, but not at a very fantastic pace, around 51 to 52 level. So this time around, market consensus is expecting it to dip slightly lower to 52.1 from 52.4 that is printed in the previous month of October. So if it came in within expectation, that means the services industry is not going at a rapid upward pace, i.e. that could actually allow the Fed to ignite its 3rd interest rate cut in December. So let's say if it continues to go down lower than what market is expecting at 52 or even 51.5, 51.8, that would indicate a softening of the expansionary trend in the services PMI. So that would potentially bump up the odds of a interest rate cut for the 10th of December FOMC meeting, and that could potentially support a further weakening of the US dollar, in turn supporting a firmer global US stock indices price action, and indirectly could create a positive feedback loop globally to other global stock market benchmark indices as well. So other than the services PMI data that is out at 11 p.m. Singapore time later, other key data to take note of going forward will be this ADP employment change data for the month of November. That will be up at 9:15 p.m. So ADP employment change data is an unofficial organization that does the labor market compilation. So this data is slightly different from the way the official NFP data is being compiled. So market is also paying a close attention, but not as close as the non-farm payroll data, which is only will be released after the Fed meeting on 10th of December. That means they will be released on somewhere around 16th of December, if not wrong. And that NFP data will be outdated. So that data will only be constituted of, I think, a combination of the October and November data. Right, so this ADP data is for the month of November. So it's not really that I mean, market participants will still view this, but not as important as, and because of the way the calculation is being done as versus the official quarterly compiled one. So, but nevertheless, the ADP employment change data, the consensus is expecting a very low number from previous number of 42K added. It also the market is looking at only 5K jobs added for the month of November. All right, so that actually potentially also represent a rather weak labor environment if from the data compiled by the private organization ADP. All right, so then thereafter at 9:30 p.m. Singapore time, we have ECB President Lagarde's speech. So that could potentially impact the euro dollar and the euro crosses. And previously, I did mention that the all important 11 p.m. forward-looking ISM services PMI data. All right, then thereafter at 11:30 p.m. Singapore time, we have the EIA crude oil stockpile change. So that will be a weekly affair for crude oil, the crude oil market. So this could also potentially short-term prices of the WTI crude oil. right? Then going forward in tomorrow Asia session, we have not really a tier 1 but a tier 2 data, 8:30 a.m. Australia balance of trade data, so that could potentially impact the Aussie dollar, but not so significantly because this is a tier 2 data. So that will be at 8:30 a.m. Singapore time. So that sum up today's daily dose of market insights. Kelvin here signing off. I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.